Okay, folks, welcome to this session, this coverage of the ECB decision. Now, we really think that what's important is not the actual decision itself, since the decision is likely to be as is, but it's important for us to anticipate or to figure out what phrases, what words to look out for during the press conference. The real action happens during the ECB press conference. But anyway, before we go to charts and stuff, let's just take a look at some matters that we need to some background information. Now, first and foremost, we have to remember that the ECB's charter is really to maintain price stability. Unlike, say, the Fed, where the Fed is also looking at the jobs numbers of the U.S., the Fed is also basing their decisions partly on what's happening in the job market. In Europe, that's not the problem of the ECB. In Europe, the problem of the ECB is really maintaining price stability. The current definition of price stability is that inflation in the ECB should be around, but not at 2%. So it should be close to 2%, but should not be at 2% or should not exceed 2%. In Europe, we measure this inflation by looking at the annualized harmonized index of consumer prices. Now, where is the ECB inflation, or rather, where is the Eurozone inflation rate right now? The last inflation data that we had puts it at 2.5%. Under normal conditions. Harry, it depends really on your society. On a society that is aging, on a society that has a huge old population, the focus has to be on price stability and not on employment. I'm sorry to say, if you're a young person in the Eurozone, it's going to be a difficult road for a lot of young people. So anyway, inflation and expectations. Again, the last inflation data in the Eurozone came out at 2.5% annualized. Under normal conditions, this would have prompted this should have prompted a rate hike by the ECB. In fact, 3 months ago, we were expecting that by September we were going to get another rate hike. But things are changing. In his latest testimony before the EU Parliament, Trichet told us that they were reviewing the medium-term outlook for price developments in the Eurozone. Now, this is one of the things that you would like to hear from later on in the press conference. What would Mr. Trichet say about their review of the medium-term outlook for inflation? Because what he would say then would be our main determinant on what to do with the euro later. Now, before we go to the actual words to expect, let's just discuss some of the things that's happening in the Eurozone that is not actually a responsibility of the ECB, but unfortunately is becoming a problem that the ECB has to deal with itself. So, persistent problems in the EU, we have structural issues. What are these structural issues? It's difficult to hire people. In some places, I would think of Portugal for one. They didn't even have a nationalized land registry. So it's difficult to hire people, it's difficult to start businesses, and it's difficult to fire people. Okay, these kinds of problems are a a bar for new businesses to get set up. When the EU community, or when the European Monetary Union was conceived, they had what was called the Stability and Growth Pact. According to the Stability and Growth Pact, the budget deficit of an EU country, an EU member country, should not be higher than 3%. Its national debt should be lower than 60%. Of course, we know that some governments have violated this, especially the national debt lower than 60% of gross domestic product. The Greek government before was very creative in lowering their debt in order to be accepted in the Eurozone. They had help from Goldman Sachs in hiding part of the national debt so that they could qualify membership in the Eurozone. And that's why they are at the center of this problem. That hidden debt has suddenly come out, and that has pushed national debt above 60%. But really, one of the main problems here is that at the start of the EU, at the start of the Eurozone community, France, Germany, they also violated these rules, especially the no budget deficit higher than 3% of GDP rule. That was violated repeatedly by Germany before. But guess what happened? There were violations. Supposedly there are penalties for violating these rules, and yet Germany was not penalized. So I think countries came to the point where they told themselves, "Oh, looks like we can just ignore these rules." Yeah, exactly, Harry. The big guys were able to violate the rules before, at the start, at the beginning of things. Even before you've had problems from Portugal, from Greece, from Spain, Germany and France were violating it with impunity. And if the big guys can violate with impunity, why not the little guys? So they said, okay, let's play fast and let's play fast with these rules. And now we have this problem. Now let's move on. What's the current situation? Current situation, Harry, I'm sure you know this. Angela Merkel's losing her grip and power. Her party lost last week's elections in her own state. Okay, and if Angela Merkel loses control, if her party is losing power, she's not exactly going to get kicked out as chancellor. She will still be chancellor, but it will become more and more difficult for her to take action on behalf of Germany for the benefit of the Eurozone. Okay, so any Eurozone issue that would crop up, that would need the Germans to again give way, that would need German participation, that would need money out of Germany, or maybe that would require the use of the credit rating of Germany. Any such move would probably not pass in Germany. So when it goes to Parliament is going to go to vote it down. In Italy, we also have problems. The last couple of weeks, the Italian government has been finding it difficult to borrow money from the market. They were starting to pay yields for their bonds that were as high as Greece's. So what happened? The ECB stepped in, but then when the ECB stepped in, they said, okay, we will buy your bonds. That way you don't have to pay those usurious yield rates that the market is asking you, but on the condition that you adopt austerity measures. And what happened in Italy? Initially, they had a combination of austerity measures and new taxes. Of course, the rich got protected, and you have some MPs saying, hey, why are we taxing the rich? If we tax the rich, they can't spend. If you tax the rich, they will bring their money elsewhere. They will take their money elsewhere, and we end up a poorer country. We end up with having more problems. And This is an issue that would probably be ongoing for some time. The problem here is if the Italians cannot pass a budget that has austerity measures and revenue measures in it, might be that the ECB will suddenly say, all right, you're not really getting your acts together. We will stop buying your bonds. Of course, unfortunately, the ECB really cannot say this out loud, because if they do, Harry, yeah, I know. We better share that to the rest of the room, Harry. But I totally was thinking, that was at the back of my mind. I just can't say it out loud. It might offend people. But you feel free to share it to the room. So, Italy is having difficulties in raising the money to run the government. Also, more problems. The Eurozone bond deal, it's getting nowhere. Supposedly, if you have the Eurozone bond deal, other countries like Italy, like Spain, like Portugal, can borrow from the financial markets at a cheaper rate. Okay? In return for this, the Germans would have their borrowing rates go up as well, since essentially the Eurozone will be adopting a singular yield rate, a singular credit rating. Problem with this is the bigger countries, Germany in particular, does not want it. Why should their citizens have to pay more for when government borrows money, when they can't be too sure that the other countries would actually be paying its debt? Why should they risk that they will be on the hook if another country defaults? So all of this situation needs some resolution. And unfortunately, when you go to the Eurozone, there is no central government to say, enough is enough, we are going to take this course of action. Okay? Yes, you have the EU Parliament, which are great at creating rules, but the rules that they create are not really implemented. Brussels, at the moment, is in no position to dictate to other countries what to do with their own fiscal plans. So, this has left a situation where the only ones who are in a position to do something about the problem is the ECB. Okay, since at least they have one tool that they can use. They can print money. Although they cannot legally print money and just give it away the way that the Fed is doing. They have to be creative in doing so. Now, let's talk about what has been going on as far as ECB policy action and potential changes in leadership is concerned. ECB monetary policy is focused on addressing inflation. Your inflation rate in the Eurozone has been above 2% since December of 2010. This year, the ECB has already raised interest rates twice, in April and July. In fact, last July, we were thinking that by September, there will be another rate hike in the ECB. But the picture has changed. Also, take note that Jean-Claude Trichet is on his way out. By October 30, he will be replaced by the governor of the Bank of Italy, Mario Draghi. And although, from what I've read so far, it seems that they are of one mind as far as which policy actions to do. So at least we can be assured of continuity as far as the way the policies of the ECB is going to be going forward. Now, what are we supposed to look for? If you're trading later, what do you want to hear? What do you want to see? Now, we do know that the interest rate will remain steady. But as we said, in the last testimony of Jean-Claude Trichet before the EU Parliament, he mentioned that they are studying again they're he mentioned that they're studying again their outlook for medium-term price stability. In that same testimony, in that same hearing before the EU Parliament, Trichet also said that, you know what, guys, I really can't do anything about inflation. I know that it's my job, but inflation is coming from overseas. It's not because we have a lot of money out there that's chasing the same number of Volvos, the same number of Mercedes that's being built, but we actually have a situation where you have higher oil prices, and we don't really have a lot of oil that's sourced within the Eurozone. We have a situation where commodity prices are just going up, and we are not a commodity producing region. Okay, we are no longer a commodity producing region. Okay, we could manufacture. We have financial services. We have a services industry. We have a manufacturing industries. But as far as digging coal from the ground, as far as digging iron from the ground, that's not something that the Eurozone does. Eurozone is not a major player in this, and so we cannot control. Well, Harry, you've been grabbing Libyan oil before, but it will take at least a year before Libyan oil will be flowing back to the Eurozone. Yes, exactly, Colin. They just spend money that they don't have. So, during that press conference, if once again we will hear Trichet talking about this is really about commodity prices, and this is not about an abundance of money that's chasing a limited number of goods. Okay? Inflation that comes from a market that's flooded with money, with little goods to chase. Let's put it in these terms. Say the whole economy you have the whole Eurozone economy equivalent to 10 cars. And this year, or rather a year ago, the whole Eurozone economy had only 1 million euros. And now it's 2011, the Eurozone economy has 2 million euros, and you still made only 10 new cars. Under those conditions, you have 2 million chasing 10 cars. So people will probably bid in order to get those cars. That's inflation, and that's the kind of inflation that a central bank can address, that the central bank can control. But inflation that's coming from the fact that we simply cannot make new cars, we simply do not have the natural resources to replace these things. Well, it's just an example, Colin. Inflation that's coming from overseas, inflation that's coming from higher commodity prices is not something that could be addressed. This is not a situation that was imagined 15 years ago, 20 years ago, when the Eurozone was being planned, when the EU, when the Euro was conceptualized. No one expected that gold would be at around, what's gold now, 1,900. At that time, I think gold was 200 or 300. So no one expected that natural resources from coffee to sugar to wheat to iron to copper to everything. We were not expecting that something like this could happen. Okay, so there were no plans, there were no provisions. When Trichet got his job, the job was defined as keep inflation at 2%. But unfortunately, inflation cannot be kept at 2% simply because of the source of that inflation. So if Trichet emphasizes later that I cannot do this, even if I hike rates to 3% or 4%, I cannot control the amount of oil that's being produced out of Libya. I cannot control the amount of oil that's coming out of Saudi Arabia. So Under those conditions, I can't do anything about the rising prices. I'm sorry. And if Trichet tells us these words, if he emphasizes that commodity prices is something he cannot control, then it's a hint to us that the ECB will be backing out of its official tightening cycle. Even if interest rates are above 2%, if they're saying we can't do anything about it, despite that being the definition of our job, well, Colin, wouldn't it be good for the Eurozone if the Euro will a lot cheaper? I would think that the Euro at 1.3, at 1.25 would be a good thing, especially for Germany. Especially for even the Italians would want a Euro that cheap. Well, I'm also thinking along the same lines. It's rumored that China is behind the gold. China wants to back up yuan with gold whenever it becomes convertible. I don't really know, Harry, but let's put it this way. The amount of gold that's produced in the world in a single year is about 250 billion. Or actually, it's around 150 billion as of 1,700. I don't know how much gold is right now, but assuming that gold is at 1,700, roughly annualized gold production is worth 150 billion, and that's what that's not even 1/10 of the reserves that the Chinese have. So I don't know about them being behind it, but certainly the growing affluence in China is also helping this. But more so, the accessibility of trading trading gold. Rob, well, yeah, maybe partially backed. Excuse me. So, again, guys, as far as the rate decision is concerned later, this is what we're going to look for. If we see a discussion on, if we see the discussion focusing on commodity prices, on how the ECB really cannot do anything about it, then to us that's President Trichet telling us that can I just focus on the other stuff that needs to be done? Because I can't do anything about inflation. I know that's my main job. That's what you hired me for. But I can't do anything about it. The theory wasn't there before when the job was created. Okay, it wasn't even imagined that something like this could happen. Well, I know, Harry, I know. Well, Andrea, hawkish tone is always good for a currency. If they have a hawkish tone, it's always good for a currency, not necessarily good for the economy. Again, as far as Trichet probably signaling an excuse for markets to short the euro, quite possibly he might, by saying these things, by focusing on commodity prices. Well, Colin, he's stepping down at the end of October, so don't blemish the name. Allow him his graceful exit. So, given that, what are we to do with the market? Okay, that's the bigger question. How are we supposed to take action? How are we supposed to respond to all of this? Well, let me show you the chart of euro, and let me show you where euro is. I'm looking at the weekly chart for euro. And where do we find ourselves right now? By the way, guys, we are just a few minutes away from the rate decision, 5 minutes away from the rate decision. Although, oops, that's not what I wanted to do. There you go. Can you see the chart now, Sakib? Excuse me. All right, good. So what are we supposed to do? If we look at our charts, this is the weekly chart. This is our upswing for the year. Where do we find ourselves? We find ourselves at a critical point. We've been congesting since April from around the, let's just say, the 39.62 area. At its extreme, we had a false breakout that gave us 38.37. And I'm thinking, if we are to get a dovish stance out of the Eurozone, out of the ECB, then Andre, you look at it as 40 to 45. Okay. Andre is looking at it as 140 to 145. But whatever number you're looking at, the idea is, if we have an official withdrawal of the hawkish policy stance, we should be looking for a break on the sell side. We should be looking for a sharp pullback in our euro over the next few days. I'm looking at this and I suddenly realized that despite our hawkish stance by the ECB, we never really were able to see a big rally. Okay, in the initial rate hikes, yes, you spiked up to 49.40. But in the July decision, you barely managed to push up. So I would say that that hawkish policy stance of the ECB has been responsible for us actually being able to stay above 1.4. If it were not for that hawkish policy stance, probably the difficulties that the Eurozone is now currently seeing would have meant that we should be around 1.3 already. And now we are at the point where that hawkish policy stance could be withdrawn. So, over the next few days, if indeed the hawkish policy stance is withdrawn, if they decide that we will go neutral, then over the next few days we risk a downside breakout that would probably be more sustainable this time. We risk pulling back at least to the 61.8 fib level. Well, exactly, Harry. So, in less than a minute, we're going to have our interest rate announcement. Forget about it. It's not something that we're interested in. We're a lot more interested in what will be said at that press conference. And again, just look for talk about this inflation being the fault of commodity prices, and that can you just skip this 2% thing for now and let me focus on doing other things. Remember that the banking system needs fixing. He needs to support the budgets of the different governments. He needs to buy the bonds of the periphery, even the bonds of something like Italy, which is supposed to be a high credit rating country. And yet they are paying yield rates that are even higher than my country. Well, Andre, they are actually doing, thank you, Ram. They're actually doing QE in secret. Why do I say this? In the Eurozone, you've got 1,500 banks that can go to the ECB and then just tap the ECB for any financing need that they require, for the monies, for the cash that they require. All they have to do is present to the ECB a bond that a country issued, or maybe even have a bond that they are issuing themselves. Exactly. They have been doing this, they have been doing it secretly. Well, Suleiman, it's rare that you get ECB decisions leaked. In fact, I've never heard of one. You could probably get a leak on statistical data. Okay, data gets leaked, especially the PMI data, the CIPS manufacturing data. These are things that often get leaked. But rate decisions, maybe a surprise rate decision. But yeah, thank you, Sada. So again, folks, 1.5, nothing to get excited about. It's all in the press conference later. So, how are we supposed to deal with the press conference? To me, if you don't want to go to the emergency room of a hospital, I would rather not do anything. Allow the market to do what it wants to do. Anyway, if indeed there will be a withdrawal of the policy, and if indeed we get, yeah, well, Colin, why stress yourself out? Okay, if there's a withdrawal of policy, that could give us a nice trending market. Okay, we've been looking for a trend. That would be a nice excuse to trend lower in euro. That would be a nice excuse to get out of this congestion which you have had since April, and at the very least ease off to your 3660 area. And if I look at price action, I would say my next critical support is all the way down to 3450. So allow for the scalpers to have their fun. But if you're someone who doesn't want the headache, who doesn't want to have a heart attack, don't do anything. Allow for markets to calm down and look for trends to develop. A withdrawal of policy would likely give us a nice trending market on the sell side. It is not as if we have a lot of good news coming out of Europe. Again, the only reason that we've been able to stay above 1.4 has been the expectation that the ECB would raise its interest rates, that the ECB is in a tightening cycle. They withdraw it. We're looking for bear market. So, but if you want to, if you want to have your fun, I would suggest that you try not to panic. What are the? I won't even give you key price levels to watch out for, because basically your support and resistances are meant to be broken during a period like this. What's more important for me are price levels. And what's even more important is for us to get the words that we need to hear. To get either a confirmed withdrawal of the tightening cycle. It will be 45 minutes or 40 minutes from now at 12:30 GMT. Well, Andre, I would look at this as market noise, although I would favor this current move, because this seems to be in line with what we are expecting out of Trichet. Of course, we don't really know for sure if they are going to remove or if they're going to withdraw their tightening bias, if they're going to go neutral in policy. Once we know for sure, we will be more comfortable that we can get a trend. But this is market pricing in. Yes, Harry, he will not talk about vigilance this time. And if he talks about vigilance, well, if he talks about vigilance, see this? This will be here. No one is expecting him to talk about vigilance this time. So if he suddenly talks about vigilance, I would say automatically it's a sudden buy on us, and I don't care what's going on. That's a big surprise for the market. People would probably call him crazy for talking about vigilance, but the market response would be for us to argue that you have a congestion for the last 3 months, for the last 4 months, and you are around the support of that congestion. Well, Andre, I guess that could happen. Yeah, you're right. You can never know. But if that should happen, I would use the proximity to our congestion floor. I don't care about the data anymore, and I would just look at it as a nice excuse to say, let's go up. At least let's do a knee-jerk response, push our euro higher under those conditions, because that is I would say, in the range of probability, that's a 0.001 probability that he would talk about being vigilant. So that would be a very big surprise for the market. Well, guys, okay, let's. I wasn't planning on going Aussie, but let's take a look at Aussie. MRC, when Trichet talks about vigilance, he's basically saying that I am watching inflation rates, and I am still willing to raise interest rates if inflation is going up. Of course, inflation has been above 2% for the whole year. Exactly. Well, he's not going to raise interest rates, but he's warning the market that I will raise interest rates if I have to. That is what vigilance means. I will do so if I have to. I might even surprise you and do it before, in between meetings, which the ECB has done before. They moved rates in between meetings. Well, I'm sure he'd like to just cool things down, Harry, but this is not the time to be laid back. Andre, it's already confirmed. There's no other candidate. We are going to have an Italian at the helm next. Exactly. I think Wim Duisenberg chose correctly to go to the private sector. I forgot which bank he joined, but he's definitely making more money. And he doesn't have as much headache. You don't have the responsibility for the millions of people. Harry, he died? Oh, I didn't know that. Oh, sorry. Yeah, Axel Weber. Sorry, I'm confusing my Germans. Axel Weber. I meant Axel Weber. I forgot which bank he joined. He was the previous leading candidate to replace Duisenberg, or rather, to replace Trichet. Yeah, thank you for that. Now I remember my history. Wim Duisenberg was the ECB president before Trichet. Axel Weber was supposed to replace him. Axel Weber was the German, the head of Germany's of Bundesbank. He quit. He got a job in the private sector, making a lot more money than he would. That's the IMF, the previous IMF head. You remove him from the limelight, and I forget his name. I forgot what his name is, but he is from the IMF, or he was from the IMF. Anyway, yes, Aussie. Chance. Oh, waiver is with UBS now. Yeah. Smart decision for him. More money with Strauss-Kahn. Thank you, Andre. It's not that he's too hawkish for the ECB, but his comments about not needing to be a diplomat definitely grated a lot of nerves. Well, okay, as far as Aussie's concerned, let's put it this way. We're actually getting a lot of bad numbers from Australia lately. We also have the risk that the Chinese would raise their own interest rates once more. There's still a huge inflation problem in China. So what am I saying here? I really tend to think that it would be a while before we can see Aussie around 1.1 again. When I look at this chart, despite what I'm seeing right now from the candles, my bias is to look for further losses here. Of course, we do have President Obama talking again at 2300 GMT. He might say the right words to push Aussie higher. What would be the right words? Infrastructure spending. Okay. If there you go, Chance. If President Obama starts talking about infrastructure spending, infrastructure projects as part of his jobs program, exactly, the big job plans. If he talks about infrastructure spending for the big job plans, then that would be something that has the potential to push your Aussie up. Okay, but I would probably go more for the Canadian dollar, because Canada's definitely to be one of the major beneficiaries of such a thing. Okay. But the commodity currencies would benefit if he starts talking infrastructure. Now, if he starts talking about my jobs plan is I'm going to give a tax holiday to corporate America, then, well, Harry, never say never. You don't know. Maybe we get the U.S. economy turning around somehow before the next election. But, okay, let's put it this way. If his big jobs plan is to allow a tax holiday for corporate America, then that could be a problem. Why do we say this? The last time that the U.S. had a tax holiday, one of the big pharmaceuticals company, guess what did they do? They had their overseas profits sent back home, and they also cut 3,000 jobs. That's supposed to be the tax holiday is supposed to be a job plan. So they have to be careful about how do they do this. If they are going to give corporate America a break on taxes, they have to make sure that there are commitments. No job cuts for a number of years. In fact, create some jobs with that money. Well, Harry, to some people, it is enough that we know that this is the policy direction that we're taking. A lot of businesses are holding back. A lot of businesses in the U.S. After the debacle of S&P lowering the credit rating last August, a lot of them decided, okay, we better step back, not do anything right now, freeze everything, hold on to all the plans. We don't know what's going to happen next. But once you have a clear policy direction, then people can start planning, people can start implementing plans that were held back. Well, Andrea, it could be a condition to a tax holiday. We will give you this, but because the last time that the Republicans assumed that a tax holiday would raise jobs, some of the biggest corporations in the U.S. actually decided to just fire more people. Cut the spending on research. Well, that is really the issue. If it's only a tax holiday, then I don't know how it could create jobs. I agree with you. So, if you want a jobs plan that would have a positive impact for the commodity currencies, you look for one that talks about infrastructure projects. But if it talks about tax holiday, in theory, creating jobs, then exactly, Colin. But for us in the currency markets, what does that mean? That means more whipsaw action for us to contend with. Oops, wrong profile. Alright guys, let's plan some more. We are supposed to cover or to plan to prepare for our ECB press conference. Let's take a look. Wow, I love Euro Yen. Looks like we have a break of our break of 108.70 is now testing the 108.29 area. I love this because I was short at the break of 108.70. So anyway, what are we getting in EURJPY right now? We are at another support level, that 108.29 region. From Asia to a good part of the European session, we traded 35 pips in EURJPY. Looks like market is really expecting that we will be getting the ECB to back off from its tightening cycle, and I guess their anticipation of this has meant a weaker euro already. So what is next for us here? What should we be watching out for? Well, if indeed we hear that the ECB is backing out of the tightening policy, then we will look for not just a break of 108.29, but again we will look for a continuation of our bear trend in Euro Yen. I know this is contrary to my general expectations for the yen pairs. In general, I tend to think when you're talking about a yen pair, just buy it and wait for an intervention. But a withdrawal of the tightening bias would mean that we should look for our euro yen to start testing historical levels once more. Maybe head all the way down to the 105.42 region. At the very least, I would look for a break of our swing lows. I would look for a break of our 107.83 price point, and look for a test of your 106.78 region. Alright folks, questions? Well, Colin, definitely if you have a strange response from a withdrawal of the tightening policy, if instead of selling off your euro yens actually spike up, I would look at any spike as a sell on rallies under those conditions. Harry, I really do not know if it had created that much jobs, or if it was just a normal level of job creation. But what I do know are the anecdotal quotes about certain big pharmaceutical companies axing jobs once they got their overseas profits sent home. All right, guys. Any questions? Otherwise, I will be off at this point, unless, of course, there's any questions from anyone. Feel free to ask, and I will answer. Oh, by the way, if you're interested to know what I'm taking when I jump into the market, I'm using a Twitter feed for whenever I take a position. So you can just look for me here. Look for this at Twitter. So anytime I do something with my platform, it gets forwarded. The MA lines are 21, 34, and 55. Coleman, it was important, but in fact, we actually spiked up following that decision. Unfortunately, I'm not really covering it. Let's put it this way: we spiked up because market was, or a good part of the market was hoping that we will see an expansion in the APF. Without an expansion in the asset purchase facility, that simply meant no change in policy. We were getting too bearish for no reason. We were not going to get quantitative easing in the UK just yet. Nico, that's an indicator I'm working in for support and resistances. Where would be a good point to short euro towards the longer term drop? Well, I would like to see a daily close under the 39.62 price point first. If I can get a daily close under 39.62, I would be confident already that this could be the start of our down leg. But again, there has to be a policy change. Okay? Unless there's a policy change, we will be stuck with this congestion until something gives in the Eurozone. Okay? So if there's a policy change, we would expect to ease off. Well, I can't give you an exact number, but give me a close under 39.62 first on a daily basis, and I would be a willing seller from just below 39.62 afterwards. Stops would have to be wide until we can establish ourselves below 39.62. Maybe get a congestion below 39.62. Alright guys, I am way out of my time already here. Yes, good idea. Follow the dollar index. And thanks for joining, folks.